We're all familiar with insurance, but I think we underestimate the the fundamental concept of insurance and applying it in our lives, right? So for example, the reason somebody would incorporate an LLC, which we're in the process of doing for our small business, is so that, well, one, you get to use the business to pay taxes instead of, having it all go through personal, which can be a better tax situation. But more importantly, it limits your liability. That's why it's called a limited liability corporation. So by limiting your liability, you're limiting your risk. Now you do pay a cost up front, and then there might be some effort in maintaining it, filing taxes, annual reports, things like that. But in exchange, you can't get sued into oblivion, ideally, right? And if you have to declare bankruptcy for the business, you don't have to declare personal bankruptcy, right? The business can go out of business itself without having to destroy your personal finances in the process as well. And if the business, you know, accidentally causes someone harm and they sue, they can sue the business, but they can't sue you personally, right? Unless, there's some extenuating circumstances where you become personally liable. And the business can take loans out, which you won't be personally responsible for unless, of course, you become a personal guarantor of the loan. So there's lots of benefits. This isn't the only instance where we can basically pay a small cost upfront to reduce the risk of a large problem later on, right? It's like home insurance, fire insurance, accidental insurance, medical insurance, whatever the case might be. Now, insurance companies make money on, well, a few principles, but one of them is, of course, deny as many claims as possible. But the other is they have actuaries whose job is specifically actuarial science, which is to calculate the odds of certain things occurring, often very rare events. Like, what are the odds that this 35-year-old dies within the next 5 years, right? They'd look at their pre-existing conditions and so on, and that's how they would judge what to charge them for life insurance, for example. And because they're using sophisticated math and statistics, they, like a casino, they will usually win out in the long run. And yet, it can still be a win-win for you as well, because you're much happier paying $5 a month than potentially paying, $300,000 if something happens, for example. So it makes a lot of sense. In our life, we can do the same thing by preempting worst case scenarios and putting in a little upfront effort, because money isn't the only resource you can use to insure something. You can also put in time, energy, right? So for example, people who learn how to swim, in a sense, that can be an insurance skill because you never know when you might need it. Learning self-defense is also a form of insurance, right? So it's worth thinking about, if you have anxieties or worries about the world, how can you insure against them, right? What skill can you learn? Who can you talk to? What resource can you invest in so that you don't have to feel so worried? You mitigate that risk. You basically create insurance around it. And I think once we start thinking this way, you realize there's almost nothing that cannot be insured against. And so there's almost nothing worth worrying about. And if it is something you can't insure against, then there's no point worrying about it because there's nothing you can do to reduce its risk anyway.